Over the last few days, tensions in the Middle East have started rising again. And whenever something like this happens, the first question is always the same. What are markets actually doing with this information? So let's step back and look at the charts carefully. Because when you line up oil, gold, silver, equities, currencies, and crypto together, the reaction becomes much clearer. Not everything is moving in one direction. Each market is responding differently. And that usually tells us where capital is flowing underneath the headlines. So let's dive in. Whenever geopolitical tension comes from that region, oil usually responds first because the market immediately starts thinking about supply risk, shipping routes, and possible disruptions, even before anything physical actually changes. And that is what the Brent and WTI charts are showing now. After spending quite some time in a softer range, both have suddenly pushed higher. Now, that does not automatically mean there is a real supply shock already happening. It simply means the market is adding a risk premium. Basically, traders are saying, if this escalates further, oil cannot stay priced as if nothing is happening. And because oil sits at the center of inflation expectations, once oil starts moving, every other asset begins adjusting quietly. Now, naturally, the next thing people look for is gold and silver. And here the reaction is interesting because gold is not exploding here and silver is not exploding either. Both had already made very strong moves before this latest escalation. Gold was already in a powerful uptrend. Silver had already gone through that huge burst higher, then a sharp correction, and now it is settling again. So what we are seeing now is not fresh panic buying. It is more like the market pausing after a big move. And honestly, that is healthy. Because after that kind of volatility, if price simply holds and consolidates, it usually means the structure underneath is still intact. And silver becomes even more interesting when you compare regions. Because even after all this recent volatility, the Shanghai premium over COMEX is still very high. That spread remains about $12. And that tells us something very important. Physical demand, especially in Asia, has not disappeared. The paper market can swing violently, leverage can get flushed out, but underneath that, physical buying is still there. And that is why recent silver weakness should not automatically be read as structural weakness. Now, if this whole situation was creating serious fear about global growth, you would expect industrial metals to weaken. But copper does not look weak. Aluminum does not look weak either. In fact, both look structurally strong. Copper continues holding its broader uptrend. Aluminum is pushing higher again, and that matters because these metals usually reflect industrial expectations much better than headlines do. So, despite geopolitical tension, markets are not behaving as if demand is collapsing. That tells us this is not broad panic, it is selective repricing. Now let's look at equities. The S&P had had a very long and powerful run. But now the chart feels different. The momentum is not as clean as before. The structure looks mature, almost tired. And that is often what happens late in long cycles. Prices can stay elevated, but leadership starts losing energy. So if geopolitical stress even enters when stocks are already stretched, even small shocks can matter more than they would have earlier. Not necessarily because a crash must happen, but because upside becomes harder. Then comes the dollar. And here I think the dollar may simply be getting a temporary breather. Because during uncertainty, money often moves back into dollar liquidity for a while. Even if the larger structural trend remains weaker, short term, the dollar often stabilizes first before deciding the next move. And the Dixie chart right now does look like that. Not a strong breakout, but maybe a pause in recent weakness. And finally, Bitcoin. This is where the reaction is actually quite interesting. Bitcoin corrected deeply inside that long-term rising channel. But now it looks like it may have found support. And importantly, during all this geopolitical tension, it is not collapsing further. That usually tells you forced selling may already be largely done. So when you step back, the overall picture becomes much clearer. Oil reacts first because geopolitical stress always enters through energy. Gold and silver are not panicking because much of that repricing happened earlier. Shanghai silver still holding a high premium tells you physical demand remains real. Industrial metals are still firm, which means growth expectations have not broken. Stocks look stretched, the dollar may pause, Bitcoin may have found a floor. So this is not one simple market reaction. This is capital moving across the system quietly, selectively. And that is usually where the real story sits, because headlines tell you what happened, but charts tell you how money is interpreting what happened. You're watching MarketVelugu Light on Markets. If you like this video, don't forget to like, share, and subscribe. See you in another interesting one.